Hello, everybody. We are back. It's a beautiful Sunday night, although the Cubs just lost to the Red Sox. Other than that, it's a beautiful Sunday night here in Chicago. Mr. Vecchio, how are you?
It's a beautiful Sunday night here in New York. The Mets won today, so I'm not too upset, although it wasn't a good series. But it's a nice day out by the pool, in the park. Just had a neighbors for a barbecue. Couldn't be better.
Nice. We had a little rain here in Chicago this weekend, but we're going to have a nice week ahead, so we're looking forward to it. Welcome, everybody, to our Sunday night first call. Tonight is just going to be Chris and myself. Victor's going to be off for a little bit, and Ilya's off this week, so we're going to just do it ourselves. And looking forward to a crazy week ahead. Should be fun with lots of earnings coming up, Chris. And then later on this week, Tony and I go on the road to Atlanta. So we head out of town Thursday afternoon, and then we'll be doing a live show in Atlanta on Friday, and then back in Chicago Friday night. So it's going to be kind of a crazy packed week for us. Looking forward to it. Markets, we're hovering right here at record highs. It was the bullish expiration everybody was expecting, and although they didn't close like super strong. What you thinking here?
Well, I was out on Friday this past week, so I just watched from the sidelines as the markets jostled and gyrated into the close, a little bit weaker into the close, as it were. But has anything really changed? I mean, I would point out that this second half of the month, from a seasonal perspective, tends to be a little bit rocky. Although once you get to July 31st, the market tends to poke up to a new local high. So perhaps we're due for more chop. I mean, isn't that the case for the markets the past week at the equity index level? We've seen the NASDAQ poke up to new highs, but by and large, we haven't done much the entire month.
No, I mean, I think that, you got some big earnings coming this week, which will kind of dictate. But on Friday, you had the market, the SPX settlement was up about $26, making it 9 years in a row in July that SPX has been up. But but Netflix was down, whatever, $60. So, which I thought was kind of weird, is the NASDAQ hung in there all day. I mean, at one point it was down a day, but just small, and the S&Ps were strong. And it was just one of those days where you're like, okay, Netflix down $60, maybe the S&Ps are going to be a little softer. And they were not. They were not. So, and we closed kind of a little bit, well, from where they were trading all day, we closed a little bit cheap. So it looks like they're going to open up here a couple of handles higher. I don't think they're going to do much tonight, but it looks like the NASDAQ's going to be up a little bit, and the S&P's maybe up 5 or 10 points, something like that tonight. We'll see. I'm kind of thinking it may be a fade into this week.
I'm trying to play both sides here, Tom, so I come out on top. I'm still looking for a short-term squeeze to the upside in stocks over the next few days, but I have taken advantage of this low volatility environment to start to buy some downside protection. Maybe it's because of my narrow worldview, but it feels like every August, September, something bad happens in the market, and then we bottom out in October, at least like clockwork from where I stand. So I'm just not going to try to worry too much. The market has stretch valuations. We're starting to see a lot of, I don't want to call it crap rally, but there's a lot of companies that don't have great fundamentals, don't have positive cash flows that are starting to lead the way. Crypto obviously has been screaming higher. So you can see people are looking for risk, looking for yield. And this is a seasonal peak. So right now I'm going to chase this and fly as close to the sun before my wings melt. But I have a parachute prepared in case we get a little bit of a 3 to 5% pullback over the course of August.
We opened like a towering line drive, as they say, sharply unchanged. S&P's literally open unchanged. They're down 2 right now. NASDAQ's down 7. It opened up 7, but that's considered to be well within the range of unchanged. Bonds open up 3, which is kind of where they were trading in the postmark right after the close on Friday. So, I mean, at least they hung in there Friday. That bonds were the one thing. They're still 112.17, so they haven't gone anywhere, but they hung in there on Friday. Crude all unched and looking at the rest of the markets here just to see if there's anything going on. I mean, you mentioned Bitcoin, it's up 200. I don't consider that much. So let's consider this just a flat opening, pretty much.
Ethereum, though, is running here at the open up 5.5%.
Yeah. but ETH's been very strong, and I think it's also getting people are playing catch up. It's been weak for for basically a year and a half, and now it's playing catch up a little bit. The first time Ethereum traded over 4,000, Bitcoin was like 55,000. So I mean, it's got a little room to work here, but again, you're talking about a relatively small asset, and you're talking about something that's been hyperbolic. Um, People have not gotten paid for jumping on Ethereum rallies at all-time highs. I mean, you waited a long time for this rally. I would use it and maybe take some of the winners, or take some of the. You're finally back to the levels that you haven't seen in at least 2 or 3 years. I would take some off the table.
Tom, we have a little bit of a luxury here where the markets aren't moving too radically at the open, that we can meander a little bit. Do you mind going a little bit more into the crypto world right now while we're here? We just had Crypto Week in DC, right? All this legislation was just passed, and Ethereum is taking advantage of it right now. Do you find yourself with a different view on the world of crypto because of the price action, the volatility, the legislation? What's your 30,000-foot view right now in the industry, in the space?
Well, if you heard that last ding, that was me selling some Ethereum up here because I've been holding it for a long time. I think I'm long at, some around 1,700. I haven't bought anything since it was 1,700. So at 3,700, I'm going to take a little off the table here. I mean, my view is, listen, everybody's long crypto. Nobody's short it. So for me, it's just a question of, it's a passive long. And until cash crypto trades a little bit differently, I just see it as a passive long. I think everybody's long crypto. I still think there's way too much in the way of smoke and mirrors and crypto scams with all the MicroStrategy type lookalikes. I think it's rich here. I don't like the pot odds. I'm long Bitcoin. I'm long Ethereum. I'm long Litecoin. I'm long Ripple, but I've pared down my positions, and I just never get out totally, which has worked. But I just look at it as like another, I don't know, like a minuscule, a fraction of a percent of my portfolio, a fraction of 1%. That's how I look at it.
Okay.
As a diversification. I mean, it gives you some fun upside. That's it.
Well, there's a lot of being a CFA charter holder, we get this research every now and again sent to our inboxes that mostly delete it. I don't know if I should be saying that out loud, but I mostly delete it. There are a few things that do come down the pipeline now and again that are interesting, and one of them has been research on crypto allocation of portfolios. And forget traders, but like for buy and hold people, like 4 to 5% now is considered the optimal crypto allocation for wealth managers, and to go right into IBIT or one of these related stocks, Coinbase, Riot, what have you.
I think it's high. I think that number's high. We did a lot of work on Tasty originally. This is when the asset class was about, I would say, about 50 to 60% smaller than it is now. And we had 1 to 2 being optimal. So I stayed in that little over 1% range personally for quite some time. But as crypto's been running up, over 100,000 and ETH running up over 3, I've been lightening up. So now I'm at a fraction of a percent. I just think it's rich. I don't own any miners, so I don't own, any of the Riots or the Mars or anything like that. I kind of listen. I love the technology, and I am absolutely convinced that blockchain is here to stay. I'm actually more bullish on things like NFTs and things like that than anybody else is. I think stable coins are here to stay. I just don't know how big a part of our future all this stuff is going to be. I think tokenization is definitely on the horizon. I just don't know how big it's going to be. I think it's overpriced in the market right now. So if you look at some of the moves that some stocks have had, specifically Robinhood, but other stocks like Coinbase as well. I think Coinbase is is probably overpriced here, but not nearly as overpriced as Robinhood is. So because Robinhood's been trading like a crypto stock, so I think it's got way too much premium built into it. But I think those are two examples of stocks that are way ahead of themselves because I just don't see the marketplace as as that big. Like Tasty accepts stable coins right now, but I don't even know if we've had anybody deposit, stable coins yet. I think it's something that it's really interesting. And the whole idea of being able to trade, tokens on different stocks all around the world in a single, currency is cool. I mean, I just don't know how close we are to that.
Tom, let's shift focus here. We have the indexes meandering around still. Nasdaq's up by 0.05%. But at the top of the show, you mentioned that there are some interesting earnings this week. So why don't we delve into them here?
Yeah, sure.
Between Monday, Tuesday, Verizon, Coca-Cola, Philip Morris, and Raytheon, VZKO, PM, and RTX.
I think if I remember correctly, I think Verizon is before the opening on Monday. So I think you already missed that one. I could be wrong.
Yeah, Verizon and Roper for those, and Ryanair for those that are trading them. They're all pre-market on Monday morning.
Yeah, so those won't matter, and I don't think anybody cares about Ryanair or Verizon, honestly, ever. So I mean, the only thing that matters in this market right now are the big kids. So I don't think if Netflix couldn't move the market, and I don't think any earnings will matter unless it's a big name.
Coca-Cola taking corn syrup out and putting sugarcane in doesn't move the needle for you?
No, but what I think was even funnier than that was Donald Trump saying that he spoke to the guys at Coke and he's going to get them to change their recipe, and then Coke came out and said, what is he talking about? He never spoke to us, and we're not changing any recipe. I just don't understand certain things, but it was like Coke had to come out and completely deny that there was ever even a conversation, So no, I don't think that matters. I don't drink Coke, so I can't tell you if it matters if real sugar does, but Coke said, no, we're not changing anything.
In theory, for the outside observer, it would, but for how long cane sugar sits inside of a glass bottle from production to distribution, it changes from glucose into fructose. So you wouldn't be able to tell the difference flavor-wise.
I think the scarier thing, if you're going to talk about Coke, I think what's much scarier is when you look at just how many bottling plants they've been shutting down and how many jobs have they been basically eliminating. I think the underpinning, and I'm writing about this actually on the Cherry Bomb this weekend, is just, the actual job market is to me the canary in the coal mine. There is this is probably one of the toughest job markets for new college grads that we've seen in, I don't know how many decades. And with stock market at all-time highs and interest rates at near lows and inflation near lows and unemployment near lows, it is very strange. And I think when you just see Microsoft, Amazon, Meta, Coca-Cola, and every one of these companies talking about reducing the size of their workforce, and the stock market rewards them for it, that's the bigger problem we have right now. And I think lawmakers need to address that. There's lots of different ways to do it. We could talk about it later, but it's just like that's the bigger thing. I don't really give a rat's ass if they're converting to sugar from from anything else.
It's a small difference, but it's a subtle difference. In 2017 through 2019, the unemployment rate for recent college graduates, 22 to 27 years old, was 3.7% on average. Post-pandemic, since we normalized, we'll call it start of 2022 onwards, it's been 4.4%. So it doesn't seem like a lot, but throw up a nearly a full % on the unemployment rate for a whole group of people.
I actually think the real number is a lot higher. I think that there's a lot of people that are taking gig work.
Oh,
and
yeah.
I don't, and the gig work throws the numbers off. So I'm not sure how real that is. I mean, you don't go to college to be an Uber driver. And so, and not that there's anything wrong with being an Uber driver, but you don't go to college to be an Uber driver. And I think that, or a delivery person. So I think that we're,
I got some data for you to support that point of view, Tom. It's a good feeling that you're having here because the BLS also measures underemployment, people who currently are employed but want to switch jobs and would change if they would like to, had the opportunity to do so. The underemployment rate for recent college graduates sits at 41.2%, the highest on record.
which is that's kind of my whole point.
Exactly.
And that is a very scary statistic. Now, there's lots of things you can do about that, but I don't want to have that conversation tonight. But I like I said, I wrote about it tonight, but I also think that it's a conversation for a different time, a longer conversation, maybe a truth or skepticism or something like that.
Mm-hmm.
But because I think it's addressable. And I also think it's important to the future of this country. It's not going to change my life or your life, but it's important to, that we keep the cycle going. I think this week earnings will be, they will definitely, I'm guessing they're going to keep vol reasonable. I don't think it's going to come in a lot this week. It is only a 4-week cycle. So, August expiration is only 28 days away, so I don't think there's going to be this we're not going to have this 1 week kind of lull or anything like that. And the market tends to go the way of expiration just in general, just it has been for the last 40 some odd years, which means there's still a little buying pressure out there. And I don't consider tonight's down 2 handles in the S&Ps or down 7 handles in the NASDAQ to be any kind of a sell-off whatsoever. Although I can see us, midweek going into these earnings. I think they just gave Netflix a pass because there was a lot of other stuff going on. But it'll be interesting to see, what happens if, one of the other big companies, if they start to miss, if the NASDAQ can hang in there.
You mentioned that there are only a few big players this week, so we're not going to talk about Honeywell, UNP, or BlackRock.
Thank God.
Blackstone. We'll skip over right to Google and Tesla for your sake. Obviously, Tesla here has been in the news a lot recently, but the volatility not nearly as high as its Google counterpart, 15.1 IVR versus the 37.5 here. Google's an interesting chart here. It hasn't gotten the love that other stocks have this year so far, but quietly over the past month, it's up 5.18%. Amazon's up 5.26% during that period. Tesla's up 4.2%. So Google's kind of stretching its wings again right now. There's nearly a $10 implied move through the end of the week, right? 53.6 IV index, $9.88. Do you have any strong feelings for this week's earnings report?
No, but I feel like, the challenge for me is that a stock like Google, it's a $185 stock. It just rallied up from 155 or whatever. It's got a $9 implied move?
988.
$10 implied move right now with 5 days to go. So if you take about 85% of that in general, it's got about an $8.50, because that's how you figure out the implied move with 5 days to go. It's about, you take about 80 to 85%. So you're talking about, an $8 or $9 expected move. It's a 4% move, essentially, just a hair over 4%. That's a really iffy play. For me, there's not a lot of juice in that play. The nice thing about Netflix was that you could sell far out of the money puts with 1 day to go, and you didn't have to worry that much, because unless it was 2 times the expected move, you're okay, and it worked out. But Google's a different animal. For me, Google, that expected move, a little over 4%, not that interesting. I think Tesla, Tesla has a similar issue. Let me just look real quickly, because last time I looked, the expected move in Tesla was pretty lame as well. What are we talking in Tesla this week? We're talking about 23 points, and you take last earnings cycle, the implied move in Tesla was $14. And I thought that was ridiculous. This time, the weekly expected move is 23. If you take about 80+% of that or 85% of that, you're talking about a $20 move. So at least that's, a third higher than it was last expiration cycle. So I think Tesla's got a little more risk built in. I mean, the implied volatility in Tesla on the weeklies right now is about 70%. And that's a decent, that's a decent tradable number. When you look at Google, the implied volatility in there is about 53, and that's the earnings volatility. I don't know. Google doesn't interest me that much. I think Google is going to be a very tough trade unless you have a strong directional opinion up or down. I think Tesla has at least the potential, if you don't want to play it in a single direction, to do something. You can go 2 or 3 times the expected move and still get a little premium early in the week. So I think Tesla's the more interesting play this week. Also, Tesla's more liquid than Google. So Google's liquid, but Tesla's better. So I think Tesla would be the better trade for the week if you're looking for just kind of that big earnings play. Anyway, that's my 2 cents on earnings. I don't know what else has earnings this week. I'm sure there's a couple other plays in there.
I was just filtering for market caps that are north of $50 billion that would draw people's interest. Verizon Monday, Coca-Cola, Philip Morris, Raytheon Tuesday, Google, Goog, Tesla, IBM Wednesday, Honeywell, UMP, Blackstone on Thursday, and then nothing on Friday. So it's a decent week for important companies, but outside of Google and Tesla, I think folks may find themselves lacking. Or wanting more.
Yep, that's okay. That's 2 good ones. And I also think, listen, we're at record highs. So we're at record highs. You can argue that there's still going to be plenty to do in the markets. The markets are record highs. Bonds are still on their butts. Most of the commodities are, I don't want to say most, but enough of the commodities are still in play. And so I think there'll be some stuff to do this week. Surprisingly, there was surprisingly good volume in the options world on Thursday and Friday. The futures world was really quiet, but the options world was busy. I think we did 68 million contracts both days, which is about 15 or 20% above the norm. So I think it was pretty busy, in the option world, which is a good thing.
Tom, I think we've covered the ground here in equities. It feels like not much has changed. Volatility is low. The indexes are hanging out where they were this time last week. Do you mind if we switch our attention to the bond market right now?
Yeah, sure.
All right, so we head over to bonds. This week we have a 20-year auction on Wednesday and a 10-year TIPS auction on Thursday. We're in a communication blackout window for the Fed, much to your chagrin. I know how much you like listening to those Fed speakers. Volatility here in ZB is a little bit higher than it is on a relative basis compared to the equity index counterparts. Do you think that at 112.5, we have a good value play here right now in bonds?
I do, but I'm just talking my book, so it's my biggest position right now is long bonds. I feel like there is, I feel like there's been a lot of risk thrown on the bond market, and I just like the pot odds in there. I'm not going to rule out there's going to be more. I'm not going to rule out that it's possible there's a lot of ugly stuff out there. I can't rule that out, but there's a lot of things that can happen in very short order, which could really move the bond market to the upside. I mean, my gut says that the failed trade policy due to tariffs, which is a complete and utter failure. I mean, you can't sugarcoat it. Not a single country has even, considered they feel we're a joke. I think the tariff policy is a failed trade policy, one of the biggest failures in U.S. trade history. And I think he's going to find a way to back out of it. He won't declare it a failure, but I think he'll find a way to back out. If that's the case, it takes a lot of the inflationary pressure off of the bond market, and it takes a lot of the pressure off the Fed. So you have this big nut out there. You have this very, I shouldn't say nut. You have this very heavy lid on the bond market right now, and I think it's easy to remove it. I don't think it's going to get worse. I think potentially that gets better. So I think the bond market has some upside. I also think that the U.S. dollar, which has been so weak, probably has a little more, has a better chance of some upside here than downside, which would also give the bond market a boost because it would stop hurting principal. I also think on just a third case is that with the growth of some of these stablecoin markets right now, because it's big in the news and everything like that, I think that more and more are going to be pegged to treasuries, which is going to create some demand for treasuries, which we currently, you have to peg it to something. So you're not going to peg it to Bitcoin. I think you're going to peg it to treasuries, which I think will give it a buyer that they haven't had in the past. And so my gut says there's a lot of potential bond buyers out there, and I don't see a hell of a lot of supply.
There's not a lot of supply right now, and the way that the Treasury is changing its issuance schedule, Trump wants lower rates, and you're not going to get lower rates until the next Fed chair, as things are currently going, because the economy is not as weak as we thought it may be at this time. That Besant's talking about changing issuance so that we don't put out so many 10s and 30s into the world. If you're going to reduce supply at the long end of the curve, you can keep down rates artificially, I suppose. I find it funny that you talk about the tariffs coming up, because I tweeted out the other day, I'm trying to put together Trump's plan here with all this. As you know, Tom, we've now granted China, our greatest geopolitical adversary, access to buy our AI chips. We're apparently levying 25 to 35% tariffs against Canada, Mexico, South Korea, and we're not releasing the Epstein list. So he's got to back down from something, and I think it's going to be the tariffs. It has to be a play.
Well, the tariffs are if he basically figures out a way to save face and eliminate a lot of the tariff talk, then that gives Jay Powell a little bit of leverage to take a softer approach to inflation. I don't like Scott Bessent's idea of just going with the 50 or 100 year, and I hate it. It's just kicking the can way down the road, and I personally just think he's a stupid human and way in so far over his head. I mean, that guy, he never surprises me with something good. Just everything that comes out of his mouth is idiotic. It's incredible to me. I never thought there'd be somebody that can make Larry Kudlow look smart. And I think he's the guy. And I'm not just saying that because, he's just incredibly dull. I can't believe I'm sitting here defending Larry Kudlow in any way. But
remarkable.
Yeah, it is remarkable. But I do trust Jerome Powell, at least that he understands, he's an economist. He understands that other Fed governors, I feel the same way, at least whether I like or don't like the Fed, it's irrelevant. I feel like they understand, what they're up against. So, and I think if you get bonds back to 116, you can do something. I mean, I think that's really the key. They're at 112.5 right now. If you get them up to 116, you're okay.
I've been playing the long end of the curve directionally neutral. It's not a super sexy trade with a 1.7 IVR. You don't need to tell me that twice. But you know what? Notes and bonds have just been through a lot of chop this year.
Yeah.
And so it's worked, right? Little building blocks.
Yeah, just sell a bunch of puts in the notes and just close your eyes.
I don't want to say that's what I'm doing, but it's kind of what I'm kind of doing, and it's working. So
I've been doing it all year. It's worked. Yeah. I can't believe I'm saying it, but I've been doing it all year. It's worked.
We got 5 minutes left here, Tom. We haven't touched the commodities yet, and you said this could be a decent week for commodities. Do you mind if we take a look at nat gas, oil, gold, silver?
I actually didn't. I don't mean a decent week for the commodities as far as like they're going to go higher or anything like that. I'm talking about from a trading vehicle.
Yeah.
Nat gas has been. Nat gas is next to impossible to trade, but it has been moving around. It's down 15 cents tonight, but I never trust Sunday nights in nat gas. Gold, we're losing the vol in gold. It's down to the lowest level of IVR that it's been, but silver's still hanging in there. Gold silver ratio is super low. Crude oil's not really in play yet, but it could be. And I think all the currencies are in play. The only thing moving tonight since we started the show, I mean, Bitcoin was up 250, then it was just down 750. Now it's down 250. So, it's the only thing that's moving tonight. Nothing else is really, the S&Ps were down 4 handles. Now they're up 25 cents. It's really a non-event.
It's really not. If an S&P's flat, Nasdaq down by 0.01, Dow down by 0.01. Tom, natural gas here, I'm sitting directionally neutral, which, natural gas
Me
has been
too.
it's been a real jerk. I bottom ticked this thing a few weeks ago in the wrong way, as in I was leaning long deltas and threw in the towel on July 9th. And so naturally it's been a straight line up since then. I went back to directionally neutral as we hit our 1 month moving average once more, but it's hard to look away with a 49.6 IVR when vol's in the dirt everywhere else.
Yeah, and it moves, but it's just such a big contract, and there's no you can't really play UNG. There's no real ETF to trade. The natural gas is a decent trading vehicle, and the futures, but they're not for everybody. Small accounts should not go near natural gas. It's
No.
the contract size is tiny, but the amount of volatility and the amount of risk and the size of the contract, the price is tiny, the size of the contract is huge. It is the riskiest futures contract there is. There is nothing, we don't offer anything that's riskier than natural gas. So unless you have a decent sized account, unless you're used to trading natural gas, just stay away from it. It's it's just that's my global warning. It can sucker you in, and you got to be careful in there. You don't want to trade more than one contract, just a big ass contract.
I frequently trade in there, and I'll get like 3 or 4 trades in a row, and it's like, all right, I figured you out, natural gas, and then that 5th trade, now I'm in the red for all 5 trades. So it's a love-hate relationship I have with this particular product.
Nobody's ever figured out natural gas. Nobody. So, and I've been trading it for a long time.
We're still trying to figure it out. All right. So, Tom, last week you said that the euro was your preferred vehicle for getting long the dollar versus my short. No, let's fix that. Getting short the euro was your preferred vehicle for getting long the US dollar. Mine was the Japanese yen. It seems like we're both doing well here because the dollar's up versus both of these currencies. As we close out the show here, rounding out with a macro idea, how do you feel about the dollar right now as it appears to be turning a corner of sorts?
Well, I have a mixed position on. I am short the euro, so that means I'm long the dollar there, but I'm also long the yen. And long yen is my biggest position right now. So I'm short the dollar versus the Japanese yen, and I'm long the dollar versus the euro. And that's just a personal thing. I also have a few long British pounds, so I'm kind of in a weird spot here. I think the dollar's made a decent low, and now it's just in chop city. The problem is there's not a lot of volatility and there's not a lot of liquidity in a lot of these underlyings. So other than playing it directionally, there's a little vol left in the euro, but the yen for me is a directional play.
Sure.
I don't think there's a lot there for the retail investor. I think it's tradable, but I don't think there's a lot there.
Tom, we have a minute left.
I think the better plays this week will probably be in the equity markets, because I think you'll see continued, it's going to be a stock pickers market. And like on Friday, saw Tesla up $10, but then there was other stocks, Netflix down $64, and Taiwan Semiconductor was down big, and AMD was down big, and UNH was down big, and then Roblox was up big. You got a lot of stocks that are at extremes. RBLX is one stock that's at an extreme. Robinhood's another stock. Those are both at upside extremes. And then you've got stocks like UNH that's at a downside extreme. And, I think there might be a post-earnings trade in Netflix this week. You've got NVIDIA at the top end of its range. I think, and you've got, again, I mentioned Coinbase before, Coinbase at the top end of its range. I think, Chris, this is just going to be the stock traders week. And I think you're going to see, depending on how you want it, go back to that Coinbase. I mean, that Coinbase move is unbelievable. And there's a lot of juice being pumped in there on just expansion of products due to stable coins and all this other stuff. And I just think I think they're all overpriced. So I think it's going to be a good stock pickers market. I think there's some stocks that are underwater relative to relative to context, and there are other stocks that are extremely rich. And I think, when volatility gets low like this, you can play them. I mean, that's what I'm going to be doing this week. I think it takes a little off the volume, but it also doesn't put you under that much pressure. The one nice thing about low vol and kind of a choppy market is you don't have to worry as much. Like you don't get run over as much.
You don't get run over as much. Tom, we are here at the 6:30 Eastern, 5:30 Central mark. We've learned a lot here tonight. We have a lot to look forward to this week. We have earnings. We're in a Fed blackout. Markets are near highs. Any final thoughts before we say or bid adieu and look forward to first call, or rather the morning show tomorrow morning?
Well, S&P is up 250 now, so they've had like a $6-7 range, not bad. Nasdaq's up 10, it was down 10, so it's at $20 range, and bonds unchanged. The rest of the market, I mean, words of wisdom. Anytime we get a post expiration week, the first week after expiration, I look for markets that trade a little thin out of the chute. I look for a little bias in the way we closed on expiration, which was a small markup in the morning and the afternoon. So I look for a continuation of that, of a little bit of buying, people that miss their chance to get out, that kind of thing. And usually it lasts a day or so. And then after that, I think you can get some good chop this week. I think you're going to have a decent down move, whether it's Tuesday, Wednesday, or Thursday. I think you're going to have a decent down move this week. Not sure if it's tomorrow, but I think you're going to have a decent down move midweek.
There you have it. Folks, we're done here. Tom, thanks for having me.
Ciao for now.
A very good morning to everybody. It's Friday.
Woo! We made it. And we also had exciting news overnight. But first, what's with the posh looks box fresh?
It is a client lunch today. Because remembering I am a client. So Pete Ward is out on the floor watching. Just remember, speak nicely to clients, champion the client. Pete Ward's taking me to lunch, and along with 11 others.
Nice. Where are you going?
So it's a big one. Somewhere in Knightsbridge. We can't give the location. Obviously, people will turn up and start shouting at me for telling them to short things.
Monkey Man will be there. Andrew McKilvey will be, asking you about rocking up, asking about senior. Yeah.
So that is that's about 12 o'clock today.
Nice.
But we've got a lot of interesting stuff. But I do just have to say, first of all, to my goddaughter over in Australia, happy birthday, Holly Hankel.
Hey, happy birthday.
18th of July, and I know sometimes I can be a rubbish godfather, but not to Holly. Holly is my favourite. Don't tell everyone else.
Oh, happy birthday.
Right, we have got some really interesting stuff.
Oh my goodness.
Shall we have a look at what's coming up?
Yeah, let's do that. So today we've got the remix of myself and Rich McDonald. We'll take you, the remix, overnight action, everything that you need to know at the opening bell, and also fast markets. We'll take you through Burberry, tons of other news that is in play as well. And don't forget, before that, downgrades, upgrades, we'll cover those here for you. Then Joachim Clement is going to join us. Joachim going to be talking all things Burberry, Costain, and also he loves senior Andrew McKelvey, so I've already reached out to him on that.
I think he's got the best sense of humour of all our guests. He is an absolute...
Quite dark humour.
Yeah, that's why we love it. Elliot Harris joins me at 9 a.m. I have already put a message into Elliot and saying, look, we're at all-time highs here, right? We know I'm getting hurt on my short call positions, but is there a trade, Elliot, that's a very smart one when vol has dropped as much as it has, when markets are high? Is there like a 3-month trade that we can put on that would be a crash protection, portfolio protection?
Hedge.
A hedge, because everybody has done so well. What can they buy now for really cheap that will make them 5x, 7x, 10x if we had a 10% move lower? So we're going to look at that at 9 a.m.
Nice, nice. And we end the week with the number of the week with Chris Beecham and his bookshelf. And if you can get that right, I will send you a prize. Gavin Ackers and Steve, one of you got the prize, but there was no stamp on it. That was not me. I put the stuff on the reception, but I'd owe you £5. That wasn't me. The week ahead, we will be joined by Isar to tell us what is going to rock and move markets next week, and what is the most tradable event in the coming week.
Just expand on that story a little bit, please, Ange.
So our lovely people on reception, Denise, and also there's also Steph. They are, really hardcore IG people. But recently they've been very busy. Lots of people have been on holiday. Lots of people have been away. And so I bring over your address, and they're sworn to secrecy, right? They're sworn to secrecy. And they get a Post-it note, and I put the gift there, and I said, you have to send this to this person straight away. So they do it, and they've never failed, except I think they're so overwhelmed with work at the moment. Mm-hmm. Don't forget, they also have to send out the welcome pack.
I'm hearing a lot of excuses for you. You putting a job onto somebody else to send the prize out. You should have been down to the post office, putting the stamp on yourself.
No, I was at the post office, but they said the stamps now live with the people at reception because they're one of the same.
All in all, Gavin Asher's got a prize through the post and had to pay postage himself for it.
Sorry, I think it was £5. Was it Gracie? One of you. I owe you £5.
Yeah. Good morning to you all. On the chat, Gavin Ackers is in the house. Andrew McKelvey is. Andrew, we want to hear what your thoughts on Burberry are. We're going to come on to that shortly. Shilling Warwickshire. Now that is a name, isn't it?
That is a name.
Avi Fine is in the house. Steve Davies away from the numbers. Neil, good morning. Jugger and Friar Tuck. But there is a name that I see on there, particularly close to my heart, Poppy. So we recorded our second podcast yesterday afternoon, and my gosh, did we push the podcast studio to the limits. We had to be out at 4 p.m. and we were still talking at 3:57.
Did they turn up the lights on you?
They certainly turned off the aircon.
The goodbye music.
If you see, the chat's made the mistake of wearing blue shirts.
Oh.
They turn off the aircon because it interrupts with the microphones. But then they also have these big lights like we do in the studio here.
Which are hot.
So it is absolutely boiling. So anyway, we spoke a lot, and my goodness, what an incredible episode. If you are interested in how to construct a portfolio, we talk a lot about risk and how to think about risk. And also, we did a deep dive into equities with, Mark, who has been at the height of European fund management for 40 years, UK and Europe. So, yeah, that one's going to be out this evening. The Art of Investing.
Are we going to get their portfolio shared on Discord as well? Because I think there's a rebel competition going on. Yeah, Discord challenge.
I am, and I can't wait. Poppy, what do you think? Are they going to have a chance of beating you? See if the smart comments come in then. Right, let's dip into overnight action. We've got a lot to get through. So with all-time highs yet again, let's look at the economic calendar for today. Relatively quiet. We've got building permits expected at 1:30. Housing starts, nothing major that's going to move. But it is Sunday. You have to look to in Japan, because we have a bit of a referendum going on the Prime Minister. So watch out for those results on Sunday.
Now, the other key thing as well is we have had so much in the way of results out from Netflix overnight. Were you watching that yesterday after the close? Because I was. It was like really, really exciting.
Watching Netflix or watching the results?
Well, the results rather. I can't watch Netflix because I don't have the subscription anymore. But
why's that?
Because they raised my price. I was a late adopter. And I thought I was getting a good deal because I'd never had a Netflix subscription. So I signed on for $9.99. And then it swiftly went to $12.99. And I know it's not a
But you've cancelled it.
I haven't, and now I'm stuck because the big thing, other than the earnings, is I'm sure you've seen it. I'm sure unless you're living under a rock, you may not have seen this. But they're starting to put out all these posters of Stranger Things 5. Have you seen that being advertised?
No.
Producer Phil's kind of like, bloody hell, I've lost interest, he said this morning, because it's taken them long enough to try and get Stranger Things 5 out. I'm going to pop this on my screen, FNF11 here, and apparently the trailer is going to suggest how Vecna is going to return. Trader friends, are you a Stranger Things fan out there? Please let us know. I know Maturin is
Is this why the stock dropped after hours?
Well, the stock did move a bit higher, then it dropped, you're right, suggesting maybe that the expectations were baked in, right?
Funny that at all-time highs, isn't it? On a 40 times earnings, maybe it's priced for perfection. So they did beat numbers. They had a beat on the top and bottom line. The subscription and advertising growth helped that, as did the new content that Anja's talking about. However, the weaker dollar was pretty much the reason for them being able to raise revenue guidance. So that weaker dollar, yes, it's going to be a theme throughout all of these US earnings. But the market's meant to see through that, right? Especially on 40 times earnings. There was also a warning that the operating margin was going to fall as they had to write down the value of some content.
That's right. They warned it was going to compress, was the suggestion, in the second half due to lots more marketing spend and higher content costs. If you want to whack up my screen, Producer Phil, I've made a graphic there so that we can look at this on one page.
Fantastic.
Also, the slowing subscriber growth. That was one thing I was watching out for. How much growth, because we know they've been adding like crazy, but is the growth slowing down? The suggestion is that it is. And that, remember when they cracked down on passwords? So Aaron's, ex-girlfriend couldn't, they couldn't share their password anymore amongst his family. And suddenly they couldn't use Netflix because...
As everybody around the world. And that's why the stock is up 300% since they did it.
Yeah, but the benefits of that crackdown now easing, Rich, now easing. And the other thing that I watched out for too, if you saw my short previewing the Netflix results, and Rich did one on the markets as well, is that I was watching out for what it was going to say about, the live sport offering.
Oh, yeah, and the WWE wrestling.
Yeah.
I think it's WWE now.
WWE, yeah. Well, they're trying to, what does the E stand for now? WWF. Is it E? Yeah, I think it's F, but they changed it to E, entertainment. That's right. And loads of competition coming in the streaming space, right? Disney Plus, and also a lot of entrants in emerging markets like India, really cutting into their market share.
So all in all, the market tried to spike we saw about, remember it had gone up 1.9% during the day, and it tried to go a further 3%, but straight back down. So we'll see when the all sessions open, but it is down around about 1.8%. So giving back what it had gained during market hours yesterday. One to watch. But those of you who sell vol on earnings, then you will be a winner, because certainly was expected more than a 2% move. So, right. Do you know what's on the same price to earnings as Netflix?
Oh, is it in luxury?
You are wearing it.
But remember, you teased me. I was Burberry and for a long while.
I think that looks like Burberry, definitely.
It's a knockoff. It's a knockoff. I love spending on experiences, and I hold luxury stocks, but I don't spend on luxury because it just doesn't make sense for me. I mean, I don't buy luxury items. So
when it looks as good as that does, then you take the knockoff.
I have a hack. You know, go to the places where they produce all the stuff for Burberry anyway, and you're gonna get a pretty good copy. But you know, from a different brand, not not like a Burberry with one less R. Pre-marché.
Right, let's have a look at the results then. So this thing is on the same price to earnings. That is right, 40 times earnings for Burberry. And what do you do when you're on 40 times earnings? Well, you don't expect a 1% drop in sales. I don't think those two really compare, but it is in recovery phase. So comparable sales, smaller than expected drop of 1% in early signs of a recovery, very early signs of a recovery. And of course, the new CEO has been there for around a year now, and we're getting
Hello, everybody. We are back. It's a beautiful Sunday night, although the Cubs just lost to the Red Sox. Other than that, it's a beautiful Sunday night here in Chicago. Mr. Vecchio, how are you?
It's a beautiful Sunday night here in New York. The Mets won today, so I'm not too upset, although it wasn't a good series. But it's a nice day out by the pool, in the park. Just had a neighbors for a barbecue. Couldn't be better.
Nice. We had a little rain here in Chicago this weekend, but we're going to have a nice week ahead, so we're looking forward to it. Welcome, everybody, to our Sunday night first call. Tonight is just going to be Chris and myself. Victor's going to be off for a little bit, and Ilya's off this week, so we're going to just do it ourselves. And looking forward to a crazy week ahead. Should be fun with lots of earnings coming up, Chris. And then later on this week, Tony and I go on the road to Atlanta. So we head out of town Thursday afternoon, and then we'll be doing a live show in Atlanta on Friday, and then back in Chicago Friday night. So it's going to be kind of a crazy packed week for us. Looking forward to it. Markets, we're hovering right here at record highs. It was the bullish expiration everybody was expecting, and although they didn't close like super strong. What you thinking here?
Well, I was out on Friday this past week, so I just watched from the sidelines as the markets jostled and gyrated into the close, a little bit weaker into the close, as it were. But has anything really changed? I mean, I would point out that this second half of the month, from a seasonal perspective, tends to be a little bit rocky. Although once you get to July 31st, the market tends to poke up to a new local high. So perhaps we're due for more chop. I mean, isn't that the case for the markets the past week at the equity index level? We've seen the NASDAQ poke up to new highs, but by and large, we haven't done much the entire month.
No, I mean, I think that, you got some big earnings coming this week, which will kind of dictate. But on Friday, you had the market, the SPX settlement was up about $26, making it 9 years in a row in July that SPX has been up. But but Netflix was down, $60. So, which I thought was kind of weird, is the NASDAQ hung in there all day. I mean, at one point it was down a day, but just small, and the S&Ps were strong. And it was just one of those days where you're like, okay, Netflix down $60, maybe the S&Ps are going to be a little softer, and they were not. They were not. So, and we closed kind of a little bit. Well, from where they were trading all day, we closed a little bit on the little bit cheap. So it looks like they're going to open up here a couple of handles higher. I don't think they're going to do much tonight, but it looks like the Nasdaq's going to be up a little bit, and the S&P's maybe up 5 or 10 points, something like that tonight. We'll see. I'm kind of thinking it may be a fade into this week.
I'm trying to play both sides here, Tom, so I come out on top. I'm still looking for a short-term squeeze to the upside in stocks over the next few days, but I have taken advantage of this low volatility environment to start to buy some downside protection. Maybe it's because of my narrow worldview, but it feels like every August, September, something bad happens in the market, and then we bottom out in October, at least like clockwork from where I stand. So I'm just not going to try to worry too much. The market has stretch valuations. We're starting to see a lot of